Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 16th of June, last trading day for the SPX monthly expiry. Should be interesting. Let's get started. Pause your readers, please. Read this. Important to you, important to us. The market model, as you probably suspect, is still quite bearish. We did not have a broad participation in the 52-week new high, new lows. We're still dominated, although it's obviously improved compared to the previous 2 days. We did not see the sell-off that we've been witnessing. But in general, stocks are not participating on a broad sense. The filtered cumulative tick, which is shown here in cyan, it was basically flat on the day, especially after multiple days of selling off. This was because of the FOMC. This was because literally everyone's just waiting to see what's going to happen here, and with today's SPX last trading day. Down here, the ribbon here is a moving average on the cumulative tick. When we see all the slopes pointing downward, this is long-term bearish. We've tested this with EdgeRater. We've done a lot of work with this, and basically this is you should be positioning for the short side of the market, not the long side of the market. You can see that the cumulative tick here was more or less horizontal, kind of what we saw up here, and the bottom line is that even though the SPX was up and down, especially with the FOMC release and later in the day, we really didn't see the participation. We're not seeing any move one way or the other. Net is bearish. In fact, we're still selling the rallies, so be aware. Index condition day over day, we did see almost across the board a reduction in the net negative gamma. This is the short-term gamma on the SPX, the SPY, the Qs, and the IWM. I will note that we did see a net increase in the put gamma exposure up to 280 from 270. When we see that happening, that usually is to take advantage of a short-term move downward. So despite what we're seeing in the wings, we are seeing the put gamma increase, and that usually is indicative of traders wanting to participate in a downside move. Volatility, we did see a increase on the put gamma side of the equation. We saw a reduction on the short-term call gamma side of the equation. So the net of this is more bullish overall. We don't think that the VIX is a instrument that behaves well with gamma, but we like to use that same visualization so we can kind of see and compare what we're seeing. Just have to remember to reverse it in your mind, because the VIX is counter typically to what the market is doing. So the increase here does show that there is some movement towards short-term participation in VIX coming off. The dot indicates where we are. We're probably going to open up in this area here this morning, well into this territory, and we'll just have to wait and see how things migrate. We're still remaining very, very high. When we see something like that, I think that's important. And note that the plus GEX dropping here is due to short-term calls actually being positioned here. And what we feel is potentially going to happen is that perhaps with the zero being up at this high, that people are going to participate in any drop here. So want to watch that carefully here. Taking a look at the near-term expiries, I've included here both today and tomorrow, and have highlighted that here for the SPX. You can see where we are. 3,700 clearly is the expiry line in the sand. We want to watch that. Over here on the SPY, which the Qs and IWM are equity settled. Look where we are with relation to some of these primary lines, the 385, the 370. We're deep in the red here. It's very, very possible that we could see some monetization, which would potentially move the prices upward. But you can also see here too that it's a very mixed bag of back and forth, back and forth, back and forth. 280 is the line in the sand on the Qs. If we do breach 280, I would watch for downside pressure to the left there. and participate in that. And you can see here on IWM, which historically has been weak, by the way, if we lose the 170 mark there, we could actually push down, and loss of 165 certainly would add more, would embolden the bears to continue to add to the downside. So watch these key levels. We think between today and tomorrow they're going to become material. And of course here on the SPX, pay attention to that 3700 level. We think that's very, very important. Above 38, I forgot to mention this, above 38, we do see pressure coming off quite a bit as we approach, higher up in here. So just be aware of that if we go above 3800 for any reason, we do actually expect a weakening of volatility, meaning the VIX coming down, and that was indicated on the previous charts. The structure for today, we're still seeing a continued drop in what we call the true gamma zeros and the true delta zeros. When these drop, it's because puts are being added and calls are being closed, just the way we calculate it. That's indicative of the structure dropping. So longer term, as these rolls occur from this period out to further, if it was just the gamma, we could explain it, but with gamma and delta happening and everything rolling out, you can see that spot is still very much below this. We're still very bearish on the overall structure, and because of that and what we're seeing in the market model, we will continue to sell the rips using paper money, of course. We did see an advance upward of the positive gamma exposure for the SPX. There's a couple reasons for that. I urge everyone to read the narrative that's here. The 0 DTE today, I've combined both of them here. You can see that it's circle 1, so this is the 0 and 1 DTE. Net negative is important. We closed right here at 37.89, 37.90. You can see it's very, very close to the transition zone, which we see all the time actually. It's going to be very difficult to push northward. You can see the net deltas here. Not so much a big deal today and tomorrow with the expiries, but certainly with the roll that's occurring in the overall structure. 38.25 is going to be really hard to get over for a number of reasons. The net delta on the expiry, just the fact that we're entering a transition zone. Below this, though, you can see it's very, very negative, and that negativity over the next couple of days could be material. Read the narrative over here on the left side, please. Added a slide here today for the combo expiry. So we're looking at today and tomorrow. This is the PM and AM. Today is the last trading day for the AMs. We think that's incredibly important. That will settle out tomorrow morning at the open. The PMs obviously hit the end of the day today and end of the day tomorrow. So the previous slide is now combined with the AMs. You can see we're coincident on where that transition is. That's a big deal when you get the expiries across the board starting to align. That's important. So these levels, the 3800 level is going to be important, and then all the way down to 3700. We've got quite a bit on the expiry, net notional on the delta, and an extremely negative level here on the gamma that's coming off. You can look at the ratio of calls to puts that are expiring between today and tomorrow. We're opening up the door literally to the downside here, so we want to pay attention to that as we go forward. Taking a look at the overall SPX complex, still hugely negative. This is the overall complex. Everything is turned on, so this is a snapshot in time. I've highlighted where these net deltas are. They are extremely large, but you can see pockets are starting to develop where positive deltas are starting to flow in. That's important, but to get through these levels requires literally that the puts get closed and that calls at these strikes get opened up, and we're not seeing that. So this is going to be a headwind to moving above. You can see the transition zone for the overall system is starting to develop. I did push it up a little bit because it's 92 relative to negative 10,000 above it. The point here is 3850, 3845 is the base of the transition zone. Above this is going to be very, very difficult to push into. There's not going to be a lot of dealer pressure, and then you've got this resistance level here at 3900, which just suggests we're not going there anytime soon. Downside is very interesting. 3700, 41 billion net notional on the deltas here. And then down here at 36, 30 billion sitting there, and you can see the ratios of the puts that are down there to the calls. So heavily skewed negative. We think that's a big deal, and combined with the expiries, it's opening up the door to loss of 3,700 and perhaps 3,600 becoming an attractor to the downside. Here's the 3,700 that I was just talking about. You can see it is consuming all of the air in the room. We're sitting up here at 37.89. You can see this transition zone starting to really develop here. Again, we're seeing calls being opened or closed. We're seeing rolls. There's a number of things that are going on. We call this the low pressure zone because once we get up into this zone, the dealer actions in this area are going to be back and forth, as you can tell. 38.85 remains material, 4,000 remains material, 4,200's reemerged. So just be aware of these key levels. And loss of that 37, I think, is going to be absolutely critical. If we do, I am going to definitely play the downside to 3,600. That's my own play, not as advice to you. So what's the summary? Market still bearish. I'm intending to sell the bounces using my paper money, of course. The zeros continue to drop in the SPX, which is longer term. It's a structural component and indicates that puts continue to be added net of calls, and this is both on the delta side as well as the gamma side. Incredibly important there because those have different time frames associated with them. We do have a large amount of negative gamma due to the roll-off, but the heavily negative, that sea of red that you saw, will prevent these moves upward and any real change. The JPM roll at the end of the month, end of quarter, is still a major factor. Market model, downward wing charts, short-term gamma being closed, meaning on the put side, which is indicative of potentially moving up in a short term, but it's not confirmed by some of the other things. So we're really at this crossroads, and of course we've got all the noise going on with the expiries, the monthly expiry today and tomorrow. We've had the ES has rolled, etc. So there's a lot going on. Multi-day upside target, I don't see us getting any time really into the end of the month, actually, above 39.90 unless the structure changes. And I think 3700 will hold into the weekend, but I am seeing indications that 3600 is becoming stronger, and we'll have to just look at that. So that's it for today. If you like today's content, please come join us at GammaEdge.us. That will take you to a sign-up page that will get you into our Discord. In the Discord, you got a lot of charting tools, a lot of ways to analyze the market structure for a lot of stocks, about 8,000 stocks. And we've got a great group and voice who are calling out what they're seeing, especially around news events and things, what to ignore and what to pay attention to. So come and join us. Love to have you and show you how we're integrating this stuff into our own trading. Follow us on Twitter, GammaEdges with an S, and then of course here on YouTube, smash that like button if you like today's content, and follow us so you can get notified next time that we post something. So that's it for today. Hope to see you in the Discord, and good luck to everyone. The next couple days are going to be very interesting. Take care.